And I looked at
Welcome
the
back.
we're a member of the Silver Institute, and I looked at their 2020 report, which was just published, I guess last week, and I think I have 50 copies of it in my office, and I'm going to throw them all in the garbage, quite frankly. Because the data is nonsense, and you've got GFMS, which is the largest data collection company on the planet, used to be owned by Reuters, and they own the data collection service that is one of the most, apparently, the most respected data collection service on the planet that all the banks around the world rely on for the supply demand fundamentals in the metal, which in itself is a joke. And you look at the data that these groups publish, and there's only three groups. There's GFMS out of London. There's Market Focus. No, what's it called? I forget what it's called. And there's another one out of London, and then the other CPM Group out of New York.
Welcome back to Wall Street Silver. We have our good friend David Stein from Kuya Silver with us. Welcome, David. Thanks for joining us.
My pleasure. Happy to be here.
I wanted to get you on because you've been in the industry a long time. You're a geologist by trade, and there's been a lot of, there's been a lot of debate recently about supply issues for silver. There's this whole LBMA issue where they had this data error of 106 million ounces of silver, and all the usual suspects, the Jeff Curry from Goldman Sachs, Jeffrey Christian from CPM Group, they always come out saying, "Oh, there's no problem. It was just an error. It's perfectly understandable. There's plenty of supply." But then when I talk to guys like Keith Neumeyer from First Majestic or Benoit LaSalle from IS Silver, they give me a completely different story about the supply picture, how it's getting harder and harder to find big mines with pure silver. Silver's becoming more and more just of a byproduct out there in the supply world. What's your point of view on this? Is there a supply problem? What do you think about what Jeffrey Christian and Jeff Curry are saying out there?
Well, look, I think in general, and with all metals and definitely with silver, mine supply forecasts tend to be significantly overstated. I've been going to conferences and watching these guys, these metals analysts, do their presentations for years and years, and I've been to dozens of these things, and it's always the same story. They're always projecting supply to go up, and often it happens, either it doesn't happen at all or it underperforms. And there's a simple reason for this. The job of actually analyzing individual mines' future supply, you have to go mine by mine, and it's an extremely tedious job, okay? And guess who gets to do that tedious job? Junior analysts. Okay, people who are right out of school, in their 20s. I'm sure they're smart people. Okay, not criticizing them in particular, but that's what happens. And what these guys do is they go and they read press releases from mostly public companies who always tend to err on the side of being positive. And they will say things like, okay, we've got this mine and we're going to put it into production in 2022. Okay, and then we see that. And they take that as gospel, okay? So then that goes in the model, 2022, 10 million ounces of silver from mine X in Mexico, okay? And that goes in the model, that goes in the forecasts, okay? Then what happens? Permitting issues, social issues, financing issues, all those normal things that mining companies deal with. And then, and that mine doesn't come into production in 2022. It comes in 2024 or 5, or maybe they have ramp up problems or technical issues. There's so many things that can go wrong in mining, and these guys don't even touch that side of it. So, and of course, in between now and then, prices could change. Maybe the mine's not economic anymore. So maybe they delay it even further. That happens all the time too. So, all said and done, that mine in effect doesn't go into production. And you can see that right now. There's silver mines sitting out there that, hypothetically, that need hundreds of millions or billions of dollars of capex. Well, that does not happen quickly. Those types of financings can take years to put together, just for the financing, let alone the construction. There's big mines, again, hypothetically out there, that have serious political problems, social problems. So maybe those don't go in production for another 10 years, right? Or maybe never. So, but they're in the model because a CEO said something somewhere that that mine was going to go into production in this particular year. So when you actually factor out all those things that can go wrong in mining, the forecast always underperforms. And so what that means is if you actually are successful at getting a mine into production, the supply situation is always way better than you think.
That reminds me of what Keith said when we interviewed him, Keith Neumeyer, from First Majestic. They have 4 mines right now that are on care and maintenance, just because of, it's just not economic right now to be mining in some of those things that they own. And that, I'm sure those 4 mines were in someone's model. Who knows whether they get removed or not. And if you look at the Silver Institute's data, they're showing, I think they were showing until recently 800 million ounces were produced for 2020. And then Keith Neumeyer tells me, nope, the real number was closer to 750 million ounces. So just like you said, there was a 50 million ounce gap between what the Silver Institute was projecting for 2020 versus what actually happened in reality. And we're seeing that same BS story already starting for 2021, where they're projecting, 820 million ounces for 2021. And who knows what the reality is going to be, but I'll bet you a beer that it's going to be a bit less than 820 million ounces for the year. What do you think?
That's a pretty easy bet. That's on your side.
You're not going to take that bet with me?
No. Well, I need like 10 to 1 odds if I'm going to go over
10 beers. 10 beers to 1. Okay. That'll be a fun night.
Because again, mines, once in a while, a mine will outperform a forecast, but again, 9 out of 10 of them will either meet or underperform, for various reasons. Like for the reason why we didn't hit the numbers last year was because of COVID, right? Well, that was unexpected, but it happened. Various mines in various jurisdictions had to shut down production, and that cost us 50 million ounces that was expected to be produced. And, similar things can happen. Obviously, we know about COVID now, that's not going to be a surprise, but there's other things that can happen that you weren't thinking about, weather related or technical, a problem with with a technical issue with the mine. So they tend to underperform overall. And again, it would be the exception to the rule of a mine would, outperform numbers. And interestingly, again, and now talking my own book a little bit, but the mines that have the chance to outperform are going to be those high grade narrow vein type mines, because there you might go into a stope that you were, let's say your mine model said it was going to be, 15 ounces per ton, and it ends up being 20 or 30 ounces per ton, because that's kind of hard to predict just from drilling. So in those cases, you might get it. In a big open pit, exactly what you're going to get. It's not going to surprise you.
Yeah.
So that's just another factor.
David, you've just basically said analysts are completely clueless and have no idea what they're talking about. But you used to be an analyst, so I guess you'd be the best to know, right?
That's right. I've got the inside scoop on that.
Yeah. All right. So if you tell me that the analysts are clueless, I guess we gotta believe you. To find a good new silver project, you just grabbed another permit real close to Bethania, about 3.5 kilometers away.
Well, this is something that we've been targeting and working on behind the scenes for many, many, many months. And it's actually an artisanal mine that is, it's very close to Bethania. It's about 3.5 kilometers away, basically across the valley. These guys were mining up until 2020, early 2020, basically COVID, when COVID happened, they shut down mining there. They're mining similar kind of silver, lead, zinc veins that we have at Bethania. So we negotiated with the guy. We went and did our own due diligence earlier this year. We took some samples, which you're pointing to in the press release there. One of them was just under 16 ounces per ton silver, right at surface. We didn't go underground because we couldn't verify the safety situation there. We didn't want to put our employees at risk, but we did. These veins, some of them actually outcrop right at surface, so we were able to go and take samples right at surface. It looks very, very similar to Bethania. It's not It's not as well developed as a mine because they have got a few tunnels going in there. Bethania's been, mining on and off for 40 years. So it's much more, developed in that sense. But we were very impressed. They're basically, if you look at the strike length of the vein system at surface, and this is multiple veins, structurally controlled, very similar orientation to what we have at Bethania. We could map at least a kilometer of these veins at surface, which again, that's what we have. It's similar to what we have at Bethania. We've got about at least a kilometer of vein material or vein system at surface at Bethania, and so it's almost like another Bethania, but at a little bit earlier stage, right? So it's an extremely attractive target for us. We want to go in and start, doing work as quickly as possible. And look, the potential here, we already have the plan, to build a plant at Bethania. So if we were to find something here that we could mine, we truck it to Bethania and put it in that mill. And maybe that will help us justify an expansion to the Bethania mill, let's say in a year or two time. Because that's another thing in our longer term plans is to not just build the Bethania mill that we've permitted already, but but expand it further as we have more material available to us. So we're thrilled about it. A lot of hard work from the team in the background to get this done, and now we get to go and do the fun part, which is exploring and seeing how it's going to fit in with Bethania.
I fully understand that there's been no drilling on this new Carmelita concession yet, so it's impossible to put any sort of quantity or resource to it. But in terms of the land package and what you think might be there, is it possible that this could double your potential resource, but it's just something we have to wait on for future drilling results? Or is it smaller than that, bigger than that? What's the potential here?
If we go back to the size of the vein system that we can map at surface, it's almost identical in terms of the strike length to Bethania. Okay, gotcha. It's like both of them, we've got about a kilometer. Now, Bethania could be actually even bigger. We just haven't mapped enough yet to know if it continues further east. But in terms of what we have, but so could Carmelita, right? We just did very quick due diligence on it. And that's what our geologists could see, right, kind of sticking out of the ground, very obvious. I mean, it looks from surface to be very, very similar in size to the Bethania vein system. And then it's a matter of, what the grades are, how deep does it go, how many veins are there. That all we'll figure out over in due course. There does seem to be something with these hills that stick out of the valley that seems to favor mineralization over the valley itself. Maybe it's that the vein systems get silicified, and so basically the rock around them is stronger, and so it doesn't get weathered. So you have these hills there, and the mines tend to be in the sides of the hills. I guess where I was going with that is actually the hill that Carmelita's on, let's call it Carmelita Hill, is actually bigger than Bethania. So
gotcha.
Who knows?
Well, yeah, you picked it up for $850,000, and it sounds like it has potential to potentially double the size of your resource base. So it seems like a pretty good risk-reward situation for this new acquisition. And we'll look to see more. You'll get drilling on it, I'm sure, within the next year or two, and see what you got there.
Yeah, I think we'll go in. We'll start doing surface sampling right away. Similar to we take a lot more samples. We just took some here and there on our due diligence, but we'll be able to do much more methodical surface sampling, similar to what we were doing or what we've been doing at Bethania, and that should provide us some really good information. And we can also go underground once we sort out the safety situation. We can also go underground and take samples. So there will be a lot of stuff we can do right off the bat, and then drilling will follow after that.
Understood. Well, thank you very much for the update, David. We really appreciate it, and look forward to hearing more in the future.
Okay, anytime.